All right, good Thursday afternoon, investors and traders, and welcome to Finom Group's weekly State of the Market. It is Thursday, and a lot has taken place overnight, as I'm sure most investors have awakened to a rather dismal look at equity futures markets. As we are traversing the course of the trading day, however, price action has been a bit more favorable. We don't know where we're going to end by the finish or the closing bell, so to speak. But what we do know is that the geopolitical conflict has accelerated, has heightened. We do have a full invasion from Russia into Ukraine. There's been some miscalculations in terms of how this would unfold. And so we're dealing with somewhat of an exogenous event, so to speak. We've already been in a correction for U.S. financial markets, the major averages, the S&P 500 finishing in a full correction from 10% plus from peak to trough here this year. And all we've seen is a proliferation of down trading days, especially on Thursday. The S&P 500 in 2022 has yet to finish positive on a Thursday. At the moment, it doesn't appear that we're going to finish positive here this Thursday, so that streak may still be alive here. So just to kind of catch up all of our viewers and our members on today's price action, given the exogenous event that is taking place currently and commenced overnight with Russia invading, full-scale invasion into Ukraine. S&P 500 futures were down, I think, at their most or at their trough point, 120 points in the pre-market. NASDAQ futures were down more than 420 points. And as you can see, NASDAQ futures are actually positive, with the NASDAQ first gapping down into bear market territory. Keep in mind, bear market, don't worry about the closing basis nonsense, folks. It's a peak to trough. 20% drawdown equates to a technical bear market. If you don't close 20% down from the all-time high, then what you actually had was a technical bear market. And we did achieve that this morning. The all-time high in the NASDAQ was 16,212. This morning, we dropped below the technical bear market level of 12,970. Or a 20% drop from the highs. So this is where we stand right now in the 12 o'clock hour. Wall Street's at lunch. They won't be back till 1:30. And we're going off script here today. This is a little bit of a different format. We're doing our State of the Market live because what we usually focus on being fundamentals. You know, what is the earnings trend? What is the economic trend? Technicals, right? What is the S&P 500 level? What's the NASDAQ level? What does breadth look like underneath the surface of our market indices? And then finally, our quantitative analysis via various different studies. What happens when the NASDAQ has a death cross? What are the forward-looking probabilities once that technical achievement occurs? That's our quantitative studies. We don't have any of that to discuss today. And mainly, we're not going to be discussing those matters because we have an exogenous event by way of the Russia-Ukraine war that has ignited overnight. And when you have that kind of a macro factor, it tends to, for lack of a better phrasing, lay waste to those disciplines, if you will: technical analysis, fundamental analysis, and quantitative analysis. So we're going off script. We're not going to look at charts. We're not going to look at studies. We're not going to talk about the earnings outlook because we don't know what the impact of this war, this invasion, is going to be on the economy. And if global economies and our domestic economy, see material slowing from this event, it's going to impact earnings. It's going to impact the fundamentals. The fundamentals will impact the technicals. And if you're a technician, you say no, the technicians impact the fundamentals. The two of those go hand in hand regardless. So we want to focus on the calculus behind, how this whole event might unfold. As I've mentioned in the past, there's already been miscalculations amongst the strategists, portfolio managers, the folks that you see on CNBC, Bloomberg, and or Yahoo Finance, if you will. Most market participants did not see a full-scale invasion happening. They saw skirmishes maybe in the eastern segments of Ukraine that are quote unquote in dispute because Vladimir Putin has made them disputable. So what is the path forward? That's really our guiding principle behind and what we hope to outline here in our weekly State of the Market. If you do have any questions, please don't hesitate. Again, this is live. Our YouTube audience obviously won't see this until it's recorded and published. And for our YouTube audience, don't hesitate. Give us some feedback. Ask us your questions. YouTube allows for comments beneath the video. So with that said, I'll begin. The world is now forced into the calculating of a new reality, one that may not be easily compared in modern history and since World War II. That is the guiding premise that the Western world order is likely confronting given the escalation of military conflict enforced by Russia on the sovereign Ukraine. On behalf of Finom Group, I offer prayers for humanity and the promise that God will win the battle over the evils of the day. Now, allow me to stray from our usual State of the Market format in order to address that which is the driving force for many matters of financial markets and investor considerations going forward. Charts, corporate fundamentals, quantitative analysis will prove little more than noise in a sea of devastating military operations taking place in the Ukraine presently. During periods of exogenous events such as this, where an action or event beyond normal considerations and expectations, such analytics are easily overwhelmed and even proven mute. That's a great many sophisticated words and phrasings to overstate the more pertinent notion of irrelevance. There are no charts, no corporate fundamentals or quantitative data that proves greater than the exogenous state of global affairs presently. The worse the sell-off in global financial markets becomes, the more questions about levels that will ironically prevail and when they are least useful. As such, financial market participants from around the world are best serving their capital investments with a discipline that provides longevity, a time horizon more distant than the coming months and quarters. If you have more risk than you are comfortable with today, reduce it. What happens tomorrow doesn't matter at all if you don't get through today. Having said that, we shouldn't find ourselves discounting history, which always proves a useful perspective, even if not immediately. History informs, teaches that humanity will overcome, good will prevail, as it is the only way forward and promised for those whom abide by spiritual doctrines. These truisms, if you will, prevail in the logic of our historic humanity. The battles of today are the victories in the making of tomorrow and how we get to the present day. So take heart, take solace in the notion and prevailing human evidence that with each misstep in humanity, it has provided a mammoth opportunity to triumphantly overcome devastation and all obstacles of the moment. While world leaders calculate their next steps in combating the Russian invasion of Ukraine, let our prayers, hopes, peaceful resolution prevail, even if ever so unlikely. As it is with investing principles, I encourage investors and market participants to approach the exogenity with a more positive outlook or endgame. And discovering what that endgame might look like, we consider the game theory involved and as follows. Firstly, be mindful of the hyperbole and sensationalism that has historically been associated with military conflict and most exogenous events. The military conflict of today is not likely to prove any different or found with any fewer headlines and lesser degree of sensationalism. In fact, the calculus involved in analyzing the future events surrounding the Russia-Ukraine military conflict, I suggest will prove extreme. Given the already assumed and promoted game plan surrounding Russia's president, Vladimir Putin, provoked conflict has proven faulty, we have to accept that there exists a consideration within Putin's desired outcome that is beyond the normal calculus. To oversimplify the context of the conflict in question, and its already derailment of the widely anticipated path, when everybody is proven wrong, there is a black swan event and an abnormal or craziness in the mix. Crazy proves a more difficult game theory and battle. The current instability in Russia-Ukraine military conflict could easily be traced and or blamed on past world and domestic leaders' actions and events. The devaluation of NATO alliance and global trade war from a former U.S. administration, or a more recent extrapolation of U.S. military and ambassadorship that went awry in Afghanistan, easily come to mind. While many will look to lay blame according to political affiliation, the endgame of the blame game only emphasizes how domestic political discourse plays out internationally and eventually with greater discourse and calamity. As a global superpower, when there is disjointedness at home, the world is always your audience. There are no winners when we encourage and promote conflict. It generally follows a path of escalation, not de-escalation, or resolve. Investors might consider the concept of momentum begetting momentum akin to conflict begetting more conflict. As mentioned previously, attempting to formulate a potential path to an endgame with the Russia-Ukraine conflict should prove conflicting itself, as a troubling dictator stretches the bounds of normal national leadership by inducing war without provocations. In short, when a crazy man is at the helm of the ship, anticipate abnormal events with the course of game theory analytics and as the conflict carries forward. Nobody assumed. Planned for a military attack on the greater European continent, yet here we are. The craziness of today can be traced back in time to the lesser military hysterics of yesteryear by the same Russian president, via conflicts in Georgia and the annexing of Crimea. Being surprised by today's military conflicts only identifies the cognitive dissonance of humanity. Our willingness to put off today that which we can or will be forced to contend with tomorrow. Well, tomorrow has arrived, folks. So how will the military conflict of today play out? Nobody knows with any degree of certainty, although many will opine and profess to know. With investing, we encourage a degree of flexibility that should partake in the same consideration with the military conflict. Maintain a degree of flexibility, but know that good always prevails. If there is an end game, that has always proven the end game.
We have our first question.
Yes, please.
From Rick Bruce. He's asking, after a technical bear market, what are the 90-day, 180-day, one-year outcomes? Is this a buy the dip situation?
After a technical bear market, historically technical or textbook definition bear market, these are historical opportunities. It really is just a matter of your time horizon. 12 months later, the average return after a technical or full-on bear market, 90% of the time they're positive. I think a lot of investors, because of recency bias, immediately harken back to the dot-com period, which was a more protracted bear market event or bear market cycle. That was also, it's very important to distinguish between cyclical bear markets and secular bear markets, because there is a duration value there. So Historically, secular bear markets can last upwards of seven years, I think, on average, to 10 years at extremes. And the likeness is with a secular bull market. The existing bull market started in 2013 with new all-time highs. That would be the official start of the new bull market, which puts us a good, 10 years into the secular bull market. If I was to give an opinion as to whether I think we are entering a bull market, I would lean on additional data. So far as, are we going into a recession? And that's where this whole subject matter kind of coalesce. More often than not, bear markets happen during recessions. So in order for this not to be a buy the dip opportunity, we have to be of the opinion that we're going into a recession. To date, we don't have those conditions. So we lean into the probabilities that this is a buy the dip opportunity, and this will probably just be a quick cyclical bear market within a secular bull market. We would have to see the impact from the exogenous event presently taking place become that much more impactful to global and domestic economies. We're not there yet. We're basically at the genesis of this whole risk-off event, if you will. So hopefully that helps answer your question there. At present, I look at this as a buy the dip opportunity. We have 4 buy the dip indicators that have never failed. And to list those, it would be credit spreads blowing out, which have not happened. Folks, we have 4 down days in a row in the S&P 500. 2 days in a row, we've seen credit spreads tighten, which is abnormal. But it also speaks to, the credit markets tend to be a leading indicator. It's why it's one of our buy the dip indicators, and they're not blowing out. You would get more worried. You would think or align your thought process to believe that this would be a more protracted bear market if you saw credit spreads blowing out. Secondly, are we in an expansion or are we in a recession? Again, as of right now, our expansion versus recession by the dip indicator says we are still in an expansion. Thirdly, are earnings growing? Indeed, earnings are still growing, and they are forecasted to grow between 9 and 10% for full year 2022. And last but not least is the yield curve inverted. The yield curve is not inverted, although it has flattened pretty much all year long. When it inverts, typically you have a good, going back to the 1960s, you have a good 14 months between the yield curve inverting and a recession taking place on average. It could be as quick as 1 month, as long as 17 months historically. But the average over the last 7 recessions has been 14 months between the yield curve inverting and the actual recession being called. So if you put all that together, it's still a buy the dip opportunity. It doesn't guarantee that we won't find these conditions in the future. But again, our job is not to predict the future. Our job is to read the indicators and to lean into the probabilities. Good questions. Thank you, Rick. All right. While I desire to know the outcome of the Russia-Ukraine military conflict, I humble myself as a global citizen and investor before the realities of the events already taking place. Nonetheless, and as we all have our thoughts on what will unfold in the coming weeks and months, here I will offer my thoughts on the path forward. The already broad-based Russian attack on Ukraine will likely lead to a short-lived conquering of the nation-state. The slow-walking exercise by a Putin-led military attack succeeds in its initial stages and provokes the greater response and involvement of the international community. Sanctions against Russia and its alliances are likely to prove only the initial response by the international community. A lack of action from the international community would be seen as conceding to the totalitarianism and even encouraging its potential likeness in the future. This is front of mind with world leaders, not just events of today, but the potential for similar future events. An inconsequential retaliation via sanctions, which may be proven with time, is the equivalence of spectating the event from the sidelines with folded hands. In the coming days and weeks, I would anticipate Putin's military conflict to be met with international military response or resistance from NATO and/or US military support. While the US administration has stated its desire to remain without ground support for Ukraine, this does not denote the US's ability and/or willingness to support Ukraine's military with intelligence, air, and sea support. This is where the flexible expectations and calculus come to forbearance. Additionally, there is nothing that dissuades a change within the outlined international community's response to shift from their pre-invasion disseminations that were originally aimed at discounting military conflict. Expect the international response to prove fluid and adjusting to the exogenous situation. In dealings with crazy leaders and their actions, more extreme responses and outcomes may be in play. While many will assume an endgame for Putin and his designated war have no endgame, this is a perfect example of denying the psychology at work for the Russian dictator. It is akin to discounting the craziness of the investor who is all in. Is the all-in participation crazy? In most cases, and from a normal discipline, yes. But this doesn't mean that all-in has no endgame. It simply means that the outcome is binary. Either the investor wins or loses. That is the calculus of, or guiding premise, I believe, underscores Putin's war. He is perfectly accepting a binary outcome, but also recognizes recent history supports his position, given the international community has ignored his past successful conflicts as well as the fractured global unity of yesteryear. Today's exogenous event has been slowly developing over the last decade, with each layer of global instability providing the fuel for Putin's hubris. It is likely a matter of when, not if, that the international community, including NATO and the United States, becomes more involved in the defending of Ukraine and the world order. This isn't desired, but it is seemingly the appropriate sequencing of events to come. Putin's brazen fabrications, discourse, and devaluation of life, world order is like nothing seen since the Nazi regime led by Adolf Hitler. I speak of this likeness to the Nazi regime as it unfortunately discounts the lives of regions that have long since witnessed such events on the African continent as well as the Middle East. Unfortunately, this highlights the world's greater consideration of Anglo-Saxon origins, in and of itself conflicting with the value of all human life. It is terribly hard not to recognize the double standards and contradictions of first world countries attempting to combat first world order conflicts without shedding light on this reality. Where white people are harmed, you get my point. When the world comes to bear and push back on the brunt of the conflict, the bad will become better and the better will become good. Just as it is with investing, this will indeed take some time. How much time is anybody's guess and a less useful speculation. But the greater the combating forces, the more quickly resolution or de-escalation will be found. The aspect of bad becoming better comes from the size and scale of the world embracing the conflict on somewhat equal footing. The insecurities of today are largely fueled by the initial headlines that focus on the initial stages of Putin's war, absent the direct engagement on equal footing by the world. a larger military resistance of consequence to Putin. Be it unfortunate or fortunate, the worsening of today's conditions and events are necessary before the ultimate turn. The international community will more greatly consider that which is being discounted by Putin. This results in a slower and more tactical response. Having said that, I would liken such a tactical response from the international community to maintain the likeness of bombs over Baghdad, shock and awe campaign, which when it does unfold. Such a consideration is perfectly capable from the international community, given its size, scope, and scale. But in between now and then, economies and financial markets around the world are likely to suffer the military conflict or the escalation that ultimately ends with de-escalation and resolution. Keeping in mind that Russia is not an economic powerhouse, the heralding of China's aspirations to recapture Taiwan doesn't seem plausible. Such a copycat event would only further lend to the instability of the global economy, which is not something the Chinese Communist Party would find desirable. The financial media and political punditry seems to reach for such low-hanging fruit narratives without considering that Putin's newly wagered war is the exact opposite of the desired partnership from communist powers and pushes out China's ambitions for the reabsorbing of Taiwan. Containment of the conflict is the goal henceforth. I'll repeat that. The containment of the conflict is the goal henceforth. Again, the win is in question, but the outcome is not in question. When containment of the conflict is determined, the aforementioned economies and financial markets will likely rebound, commensurate with the understood and accepted degree of the containment. The world could not accept the hoped-upon world order of Adolf Hitler and Saddam Hussein. The world has now been forced to realize the likeness from past dictators in Vladimir Putin and his actions. There will be an endgame for Putin, and as history proves a guide, the end result for Putin in the military conflict does not primarily bode well for Russia or Putin. But, and I stress the optimistic outlook here, where a voiding of such evil is found successful, a promise of a better world can be managed for humanity. Wartime soil is often the planning of a fruitful future.